We are live.
Okay. Good morning, everyone, and a very warm welcome to today's webinar. Today's session is focused on the challenges almost every MSME must have faced at some point, which are loan rejections and delayed approvals. So many applications are rejected not due to the lack of potential, but mostly because of the avoidable mistakes and poor preparation. So in this session, we will deep dive into how MSMEs loan get rejected and what mistakes MSMEs are making, and most importantly, how MSMEs can get loan ready within the next 90 days. Before we dive into the webinar, I would like to give a quick introduction to Iris MSME. So Iris MSME is a one-stop digital platform built for MSMEs in India to help them grow, stay compliant, and access government support. So we have a set of tools like scheme matching and digital invoicing, which MSMEs of India can access through our application IrisPeri easily. Now, with great pleasure, I would like to introduce today's speaker, Mr. Abhishek, an MSME lending expert with over 20 years of experience across banks, NBFCs, and fintech. He specializes in MSME credit, digital lending, and brings strong hands-on insight into how exactly loan decisions are made on the ground. Over to you, Abhishek.
Thank you, Vasundhara. Good morning, all of you. I hope you're all doing well, and thank you for taking time out to be here. Like Vasundhara mentioned, we would be covering a few basics in this session, and we will try to understand how loans work, how to prepare better for accessing these loans and fulfill the requirements that we might want to address through these financial assistance that we are trying to get. So, uh, this session would be covering the basics of all of it, how we can improve those parameters with our basic loans, and what are the basic things which are looked at by the lenders while we apply for it. So typically, this would flow. We'll understand the rejection reasons. We'll understand why these rejections happen. Is this because something which is out of our control or something that we can do and our better picture towards the lender? What actually are these lenders looking at? We'll try and understand this with a few examples. We'll chart out a broad map in terms of what are the basics we can look at doing, so that if we need to avail some loan down the line, within 90 days, how do we improve our chances of getting a loan? So if you want to start now, borrowing is not the same as borrowing money from somebody. I mean, we all come across as in our personal and approached by people. Could be your employee, could be your friend, could be your relative who'd ask you, say, give me some money, or they want to borrow something from you. And typically, while we are deciding whether to give them or not, let's take an example. One of your employees comes to you and he borrow money from you, saying that, oh, I have to go to village or some health reason or medical or maybe a festivity thing or a marriage, something is in my family and I want money. You would look at, you won't just give money, you would look at deciding whether you want to give money, how he is doing, how has his been behavior, what are his spending habits, what is his general uh, you know uh, behavior or character with his peers, his juniors. Those things, they kind of give you insight whether you want to give them money or not. Typically, the same line is what lenders are looking for. I mean, we are no different when we decide as an organization or lender to give money to a prospective borrower. We would look at all these things, and while the basics remain the same, the tools they change. So the documentation that you submit while you're applying for the loan could be your ID proofs, could be your banking, could be your the address and office proofs. All those things, they matter a lot. So we look at look at that and get borrower. Flows. If you're not managing your money well, obviously, if you're not managing your money well, how would you manage my money as a lender? So that becomes a critical factor. CIBIL or a bureau score or a credit bureau score, typically we call them CIBIL, but all of these history which you have created in terms of your credit footprints, they matter a lot. If an employee comes to you, asks for money, and if you have been told by his co-worker saying that he had borrowed money from me but he has not returned it, and I've been following it up since so many days, obviously that reflects really bad on him, and you don't give money to that kind of individual. So the bureau, the civil score, does that only. It reports how you have been repaying other people's money, other borrowers money, other lenders money. So obviously, if that is not proper, nobody would want to take a risk on you as an applicant while you're applying for it. Uh, the filings that you do in terms of your GST returns and the business which appears in your banking, that again is something which is very critical, because nobody wants to have a mismatch in what information is coming from one source and what is available for them to see at the other. They have to match. It not only creates a bad impression because you're saying something and doing something, but also it is not the right way in terms of, even if I want to judge what should be the base for you to avail the loan from me, I don't have a proper factor to discuss with either GST or bank. And obviously the wrong loan product, you want to avail a working capital loan, a short-term borrowing, and you are applying for a long tenure loan or a equipment finance. Obviously those things also, they create a mismatch and then the case gets rejected. So typically, going back to what I was saying, how do the lenders think when they are deciding for a loan? And this would depend on the nature of the institution you're applying for. So today, typically, if you want to divide, Indian lending ecosystem is divided into three broad segments. You have your banks, all the nationalized and private sector banks. What they look for in the borrower is the compliance, is the safety in terms of risk, and also they would want to cover that risk through a collateral. So typically they would want to look at those things while they are deciding to give a loan. And since more or less risk is covered through collateral, the compliance is looked thoroughly, they do double triple check on safety of the borrowers, uh, the risk factors, they goes down and you get a better rate of interest there, and that's how the reward and the risk factor comes into play. NBFCs have been growing steadily over the few years and have taken, for granted last few years as the MSME economy has been growing. They look at the cash flows, how the business is being managed, because if you're earning money, obviously you'll be able to pay them better. They disburse loan faster, and obviously that impacts your pricing. So slightly higher pricing as compared to banks, but also you get a benefit of faster loans. So typically a bank would say, let's for example, 7 to 10 days, and NBFC can disburse a loan in 24 to 48 to 72 hours, like 2 to 3 days is what you can get your money in. The new age fintechs or the financial technology firms which are coming in the market with the advent of the penetration of mobile, the more and more data being available for the lenders to analyze. Like the bank statement analysis has gone really deeper. The GST analysis has gone and is growing pace in terms of analyzing your financial capabilities. Even bureau, your credit history with the different borrowers, lenders are giving you money, the fintechs especially are giving you money, just confirming your identity and just checking your bureau score. So you can get typically 5 to 7 lakh rupees through some fintechs just on your bureau score. So this is how they look at while analyzing you as a prospective borrower. So coming straight away to the kind of mistakes that we do. Now, the first and foremost thing which people look at on the lending side is your bureau score. The typical bureau score, there are four bureaus that we have in country today, and almost all of them are behaving in the similar manner as they have been standardized by the government now. So any bureau, if you look at out of these four, your score, if it goes below 650, and the chances of you getting loan reduces drastically. Higher the score, the better are the chances of you to qualifying for a loan. Obviously there will be more things which would come down the line, but yes, if everything is very good but your bureau score is less than 650, a lot of NBFCs, banks, fintechs, they would straight away reject you. So what you can do to improve it? I mean, typically one of the major reasons why bureau score goes down drastically, and we have seen this happening multiple times with very good people who could avail the amount they're applying for, is the number of inquiries. So I mean, like this is akin to finding a bride or a groom for yourself. If you're like randomly proposing to all and sundry, obviously you'll be getting rejected at all the places, and this does not reflect good on your character as well. So the number of inquiries which you do reduces your score at times. And also one thing which gives out as an impression to the lender is that you are desperate for the money. So if you're applying to everybody, then obviously there are chances that you are in bad shape in terms of your financial standing with regards to your business. And then obviously when that happens, nobody would want to give you the money. Going back to the example that we discussed initially, if you happen to know your employee is asking money from everybody in his social circle, in his peer circle, in his office, obviously there is a red flag over there, and then you would not give that money. So what you should do, there are various avenues, applications, websites, uh, financial services provider who are helping you with your bureau score. You can check for yourself. Even the bureaus, they allow you to check your score on their website. So check your bureau score before you want to apply. So if your score is less, there is no point in applying because it would get rejected. And again, that rejection would get registered in your bureau. So it's a negative on both the sides. So check that. And also, if you can, don't take multiple borrowings, don't take small loans. And if there are smaller loans, you can close those small loans. If there are smaller overdues, in case if that happens, please ensure that those are taken care of before you apply for a loan. One more thing that happens, especially in the proprietorship businesses, which are small businesses, small MSMEs, your business and personal expenses happen from the same account. For very small businesses wherein you have not really moved to a current account, that is something which can be overlooked. But if you have a current account which is already being utilized for your business purposes, but you are using it to pay various miscellaneous, especially with the advent of the UPI, we see a lot of transactions which are like 100, 200, 300 rupees happening on a daily basis to various people, to family, to friends, to small shopping, groceries, all of that. That doesn't reflect good. You have to keep your transactions separate, manage it separately. And if you want to make it more structured, even if you are working as a proprietor, take a fixed amount on a monthly basis, just like a salary, and use it through your personal accounts for all miscellaneous and sundry expenses. Keep your business account only for business expenses. That shows the maturity. Also, it helps businesses project themselves as a serious businesses in terms of what lenders are looking for, not as a small amateur business which is not sure what he's doing professionally. um, Coming to bank statements, the very important and critical thing which lenders look at is how you are managing your funds, how much money you get, how you're spending it, are you maintaining anything within your accounts, are you keeping some money for those rainy days, or you're just spending, or even if you are spending money, are there any expenses which goes without explanation, or just taking cash in or cash out sort of transactions? We have seen this happening with a lot of smaller businesses, wherein whatever money comes into business account, you just take it out immediately. That reflects poorly. One, it reflects badly on your monthly average balances. It brings down them to a level which is not suitable for you to service the EMI, because obviously when I'm giving you a loan, and let's say there is a EMI of 5,000 you need to pay, if the balances are minimal, like 1,500, that EMI won't be serviced, and obviously that becomes a red flag for me to reject that application. For servicing a loan amount or EMI of 5,000, I would need a healthy average bank balance of 8 to 10,000 rupees on a monthly basis. Average monthly balance, we all know how it works. Your bank statement, your bank, even they provide that data. Typically, it's if I need to summarize it, it's the balance that you have on each day at the end of the day, for let's say 30 days in a month. Add that up and divide it by 30, you'll get an average monthly balance, and that should be maintained while you're applying for the loan. So look at that, make it healthy, and then apply for a loan. GST returns again, as more and more businesses are getting into GST purview, this is something which our lenders are looking at from both positive reinforcements angle, and also to check how the applicant is behaving. If you are allowed to file the GST returns with a penalty on a quarterly or annually basis, but you're required to file it on a monthly basis, on a regular frequency, then even if it's zero, please ensure that you file it. Please ensure that you file your GST returns, because not only it helps you in your businesses, it also helps lenders to understand that you want to follow the compliances, you want to follow the rules and regulation, and you are actually behaving within the purview of the obligations that are statutorily applied to your businesses, and that is a pretty positive sign. Also, what you are filing, your GSTR 1 and GSTR 3B returns, just be very cognizant, take professional help, and ensure that these are in line. GST, if done properly, can be a very good tool for you to borrow money. And it not only helps you acquire money faster, it also improves your profile drastically, how the lenders are looking at it. So please ensure the data is actually aligning with your businesses, both in terms of turnover, and it's also on time. This is a pretty important factor, and it's more and more lenders are looking at it from a very serious perspective. One common mistake which happens is that while the applicants they apply for loan, the lenders would come and talk to you at a different stage. We call it a PD, or a personal discussion, wherein they would not only confirm the details that you have provided, and also they would want to check why you are requiring this funding. Now, when you're looking for a business loan, this loan is attached to an end purpose, unlike a personal loan wherein you are giving money in your account, and typically the bank or the financial institute wouldn't even ask you why you are requiring that money. But for a business loan, they would want to ascertain that these business funds would go into business, and it would improve your financial standings, and you will be able to repay them the money. If these funds are diverted towards your personal goals, obviously business would stand still where it is and probably go down, and then the loan servicing becomes a challenge. And that's why they would want to ascertain how you're wiring, or how you're going to use these funds. So be ready with the answers. Right? Do just give them very generic answers. A lot of times, the you're being coached by the people who are helping you give loans, that just say that. But ensure that while you are trying to justify your loan, you are also having the backup answers to that. You require working capital, fine. Why? Because there is a season which is coming, and this season requires you to stock more. and this can be actually corroborated or cross-checked with your bank statement, because in this particular period this has gone up because you have stopped more. So these kind of statutory justifications or clarifications actually help you better. If you are actually applying for buying an instrument, please, or keep it there. This is what you're doing. So very clear on the objective or purpose that you're borrowing loan helps, goes in a long way. Not only it helps lender that yes, there is an end use which is justified for this money, but also on a positive level it shows very strongly on your character as a business owner, that you are in control of your business, you know what you're doing, and obviously this would ensure business would run for a long time and the money will be returned, because these loans are slightly high return loans. One common mistake which happens is over borrowing, and also asking for loans which are not really possible while your business is at a growing stage. What I have seen across profiles is, while applying for a loan, typically the applicant would say, what is the maximum loan you give? And if I say 50 lakh, they'll say put 2 crores, they say put 1 crore. So that really doesn't help. It goes back to the previous point that you are not aligned to a specific purpose for which you're requiring money. Also, it reflects badly in the sense of not being serious to avail these funds. It's the spray and pray kind of a mentality. Ask whatever, kuch to mil hi jayega. So that's one thing. And secondly, also you need to look at what is your standing. Uh, for example, if you know, going back to that example again, if you know your co-worker or employee is having a salary of 10,000 rupees and is asking a money, say 1 lakh rupees is what I need, there is a gap. I mean, to repay that amount, he would require 2, 3, 4 years, right? Because obviously for that money to be repaid on a monthly basis, he had to take care of his own expenses, and then from the residual money, he would pay whatever he can. So that is a risky proposition. That is exactly what the lenders look at. So if your income is less, if your turnover is less, your demand should be in line with what your income and turnover. If you can service a loan of 3 lakh, 4 lakh rupees a month, obviously you can demand that. But if your serviceability goes down to 15,000, 20,000, you cannot demand a higher loan. So again, this can be fixed. You can improve your business margins, you can improve your residual money in your account through improved profitability. This can be reflected in your bank statement, like we discussed in the previous points, and then it improves your chances to get a higher loan amount. So yes, you can be justified in the money that you're asking, not only through elaboration in terms of what you're doing, but also through your documents. Now, one common mistake which happens across is a lot of businesses, they borrow money from a unorganized market. They actually have transactions which brings down their credibility a lot by borrowing from a high rate of interest borrowers, which can be due to some emergencies or maybe some ignorance, but they actually uh, reflect a negative side in your credit history. So typically, whatever has happened, the saying goes that if you're visiting a doctor, please don't hide anything. If you're wanting to get a treatment, tell him everything that is wrong with you, and that goes for the lenders as well, because you're trying to improve your financial standings, you need to tell them upfront the mistake. They would help you, and if not for that, eventually they would find out all those things which are not in shape in your banking, and that even reflects more poorly down the line. So be very honest about your representation in terms of the information that you give them on your application form, in your documentation, and even while you're discussing the loans. And if there are multiple loans, yes, it is very advisable that you can service 8, 10 EMIs, if possible, club them into 1 to 2 to 3 loans, and then structure your debt as you want to apply or get more funds. One common mistake again, which is done, is not applying to the specific product that you need. Now, this is where again, this goes back to the few points that we discussed earlier. How clear are you about the objective of the loan that you are requiring? How clear about you are about your business? How much do you know your business? And are you actually a businessman who is not only doing business but also improving his knowledge, improving his understanding of the market scenarios? Because more and more companies, especially the NBFCs and fintechs, are coming with different products which help you borrow fund for specific needs. Equipment finance is a loan which is available for the manufacturers across segments, and they provide you those money on a very attractive terms as well. So please ensure that you apply for that. Don't go for a typical term loan. There is a supply chain finance, a purchase invoice discounting, or a sales invoice discounting which is available. So if you're wanting to borrow money for a short term, those are the products to go for. So typically, be aware what is there for you to service your financial need. And if you're not aware, nothing wrong in that. What you need to be aware of is why you need money for. So while you're applying, please be very clear about the objective, that I require this money for, let's say, a 90-day period or a 60-day period or a 6 months period, and this is my specific requirement. Or I require this money for borrowing a certain equipment or machinery, or opening up a new branch, which is a long-term requirement for a term loan. So if you are very clear about the objective, then it becomes much easier to apply for the right loan product. And that is a fact. Believe me, applying for a right loan is like putting the right key for the right lock, because uh, we all know what happens if we don't match the lock and key combination. The door doesn't open, right? So that's what we need to do. Learn the objective, be thorough with why you need money, put across that information while you're applying for the loan, and avail the right kind of loan. It only helps you avail better credit. It also helps you get better terms on the lenders. uh, the second which is very critical. Now, when the lenders are talking to you, they would ask you questions about why is in house of your business, where do you get your goods from, how do you sell it to your customers, what are the terms of those transactions, what are the things that you get if you get any of your suppliers, what are the terms on billing to your customers, what kind of margins are there. So details might be available for them to see on the documents, but they want to know it from you, because those things might be prepared by your chartered accountant or an outsider. But how well aware are you of your business? So please be very, very sure, and be very, very open about disclosing these things, because it's not your competitor who's asking you all this information. It's your collaborator, it's your partner. When your bank or a financial institute is lending you money, they are becoming your partner. So it's always advisable and prudent to be open to your partner. So let them know what you are doing, and be very the information with regards to your business. Uh, One last thing which happens is that you actually apply for the loan when it's becoming really critical for you to get the money. Like we take trains, so we all try and get reservations. So if we get reservation on time, obviously the service much economical as compared to what we pay for the ticket. So we try and get the best service. pay while booking a ticket on that car, right? So any emergency which you are availing requires you, and that is what happens on the loans as well. Not just that, while your hard targets or fulfilled, doing and end up borrowing from the wrong cost at the wrong product. So please ensure that you borrow money on the right time, plan your expenses, plan your sources of fund, and use it wisely. So if you look at, I'll just have two instances which can be very, very same. Typically, this happens in the common scenario. We ask our friend, I require money, can you help me? And he would say, oh, I got this money from this particular lender. And you also go and apply there. And you get rejected and he gets money. And then you are like perplexed, what happened? So these are the
Hi,
things which
Abhishek.
happens. And this goes back to the common. Yeah.
Sorry to interrupt you, but
Hello.
your voice is breaking a lot. Is there any way to switch to a better network?
Oh,
It would be appreciated.
let me try. Sure.
Yeah,
Let me
sure.
try. Just give me a
Thank
moment,
you.
please. I hope this is better now.
Yes, this is much better. Thank you.
Okay. Okay, sure. So, sorry about that. Coming back to this. So typically, this is what really happens, even though you and your friend can be same, but these are the reasons which can lead to him getting a loan and you not getting the loan right now. So the bank balances, the loan purposes, the right lender selection on the positive side, and misinformation, random loan amount, and uh, unclear purpose can be the reason for not getting the loan application approved. So, just to summarize, what we need to do if we want to put across our best foot forward in terms of applying for a loan, we need the bureau score more than 700. That's preferable. Keep it that. 650 plus, you have options, but obviously the cost goes up. You should have minimum 6 months of clear bank statements, no repayment lapses, no check bounces. Uh, Not just in the 6 months, it is advisable to keep it that way, but sometimes due to some business exigencies things can happen. But while you're applying for a loan, then we need to look at how do we clear those bank statements, have updated GST and ITR returns with you, be very clear why you are applying for this loan, and apply to the right lender while you are trying to borrow money for your business purpose. So if you have not really got the loan, what you should do uh, for a 90-day plan, please get your bank statement in order and see how you can improve your CIBIL by repaying your loans on time and not applying for a lot of loans. Improve your bank statement, being having healthy bank balances, uh, transacting in a manner which is prudent to a business, remove your business transactions from your personal finances, and also honor your payments through your vendors, and then apply smartly to the lender or the lending institution which fits your requirement. Now, just to give you a perspective, uh, what are how the landscape of Indian lending scenario looks at right now. So here are some suggestive names that we have put up, and what are these institutions they look at, and their USPs. So banks, one, since we discussed, they cover a lot of risks. They look at collaterals if possible, and they would look at a very stringent set of rules while they are qualifying you for the loans. Uh, so what happens, the loan approval rates are less, and also the processing time they take is longer. So if you have ample time in hand, if you have all those things available with you, you can go for the banks. NBFCs, what they do, they are more flexible in terms of the documentation, they are more flexible in terms of the way they analyze you as a borrower, and that's where they become slightly faster as compared to the banks. So typically 7-8 days from the bank, 2-3 days for an NBFC. The fintechs, the digital lenders, which are now coming more and more in the fray, they are offering you digital loans through an app or through a web link, wherein you can apply digitally. No need to submit any physical documents over here. What it does, it improves the loan disbursement time even faster. You get your loan within 24 to 36 hours, even less at times, and they also require less of information from you. So most of these fintechs, they would not really ask you for your balance sheets and P&L while analyzing you as a prospective borrower. They would just require very basic information. They would use the alternate data, like we mentioned, on the GST or on the banking habits or even just your bureau, and they would give you the loans. So that's what you look at in terms of the nature of the business. So if you are a manufacturing MSME, you should focus more on banks and NBFCs and PSUs. Uh, why? Because typically your credit cycles are longer, so you require loans which are at a lesser cost because business margins are according to that. So typically for manufacturing MSMEs, it's suggested that look at banks and NBFC and PSU banks as prospective borrowers, sorry, prospective lending institutions. For trading MSMEs, the NBFCs and fintechs are more prudent because one, your cycles are less, you require money faster. So the TAT matches over here, the turnaround time in which your application to disbursement can happen. So this is where you can apply. And the service MSMEs who are into service providing businesses, fintechs and select NBFCs, they look at these opportunities on the lending side, and they would be able to fund you better. So please choose very carefully basis your business profile where you can look at. The traders, obviously you have more options, but you can look at, if you have more time in hand, you can look at banks and NBFCs, but NBFCs and fintechs are more prudent for you to avail loans in the right time. So while summing it up and closing this session, typically what really happens is loans which are given, they are given on the basis of the profile, the presentation, the documentation. They are not given on the desperation shown by the borrower. So please ensure that you don't wait till the last moment to apply for a loan. That's where desperation creeps in. Please be very prepared. Please plan your business expenses and then apply for the finances accordingly. Uh, the consistency in your banking, in your documentation, it matters more than your business volumes, because obviously what we need is to see how the business is moving through multiple transactions and not just depending on very few or limited customers and borrowers, because that increases the risk from the lender's perspective. Be very transparent and open while you're presenting your case or applying for a loan. Even if there are certain challenges, we can look at those from the lender side with right justification. So even, like for example, even if you have some overdue in a bureau which can be justified, maybe some dispute with some credit card fee, or EMI bounced because of some technical reasons, they can be looked at and still the loan application will be processed, rather than you hiding it and then finding it at a later stage while bank analyzes you and then it leads to rejection. Very critical. Apply for the right product, apply with the right lender, and you will get a very fast approval. That's it. uh, Aware of, be very very aware of your business. I'm sure you know your business really well, but it should also come out in the interactions. Uh, be ready to answer questions. Don't hide anything. uh, if you need some help in articulating in certain answers, because at times it can be difficult to share the information even though you have it, take help. But yes, please share, be very honest, and share as much information as you can about your business while you are applying for the loan or talking to lending institution. uh, Loans are here to help you grow your business. Loans are the money which helps you earn more money, and loans are supposed to be repaid back. So please be very very cognizant of this fact. Repay it on time. Ensure that the money goes to the right channel at the right time. If you have multiple accounts, if you have EMI hitting one account, ensure that account is funded. Money in one account and EMI going from other account and getting bounced again, you will repay it, but reflects badly. So ensure that the loans, the EMIs, the repayments happen timely. The more you repay, the more you qualify in the longer run for better loan amounts with better terms. So that would sum it up. Uh, just one final line. So we all love our chai, and I'm sure we have our preferences, but nobody likes a chai which is not made properly. It should be balanced. It should have a right amount of consistency in taste, and it should be with the right amount of sugar that you need. Too less sugar or too much of a sugar again kills the fun that we want to have. So that's how the loan is. Your approach should be balanced, it should be strong, and you should not sweeten the conversation or make it dry while you're interacting with the lenders. So with that, over to you, Vasundhara. And any thoughts which you want to share, would be happy to answer.
Yes, Abhishek, thank you so much for this incredibly insightful session. It is very helpful for MSMEs who are wondering what can go wrong during the application process and how to easily rectify them, which are avoidable easily. So, thank you so much. And yeah, there are a few questions from our audience today.
Sure.
So the first question is from GK Enterprises, asking, I have a low CIBIL score. Now I am stable in financial and business turnover. Are there any chances to get loan for my business?
Sure. So typically, when hi GK Enterprises, when you say you have a low CIBIL score, one, how low is the CIBIL score and what are the reasons? So if there are any, uh, I would say, repayment issues or any loans which have remained outstanding for long, one, you should clear them. Secondly, the way to go forward is to improve the CIBIL is, since with the low CIBIL score, it's not very possible to get an unsecured loan. Look at taking a loan which is a secured loan. If you can, go for a gold loan which is readily available, which really doesn't require a bureau score as well. Use that, and not only to fund your business, grow your business, but also the repayment on that loan will improve your bureau score down the line and will help you avail better finances as well. So one, clear if there are an outstanding on your previous loans. Look at more opportunities on the secured loan side that will improve your loan credit score and help you avail funds down the line.
Okay. Yeah, there's another question from Kailash. What is the procedure for government aided loan for MSMEs?
So, Cash, there are a lot of schemes which government is providing for new businesses, growing businesses. There are various instruments which are available through nationalized banks and government-backed in financial institutions. Uh, there is so on our app, I would recommend you to go to Iris Peridot app. We have a section over there which details information on where and how you can apply for this. This is itself a session in itself, because there are so many things that are happening over there. There are government schemes which are provided by the state governments. There are central government schemes, and there are specific schemes which institution like SIDBI runs. So yes, a lot of options. I would recommend you to please go to Peridot app and look at the schemes that we have mentioned, and we will help you more with that while you reach out to us.
Thank you. I would like to add that two things really stood out today. Firstly, it's clear that loan approvals are driven by preparation, thoughtful preparation. And secondly, that choosing the right product and presenting your business clearly has significantly will change the outcomes favorably. Yes, thank you so much for the session, Abhishek. And on the final note, I'm excited to share that Iris Peridot is now facilitating collateral-free business loans for MSMEs. So these loans are facilitated through RBI registered lending partners, and the entire process is digital and highly transparent with zero hidden costs. So for MSMEs, it is easier because you can apply to multiple multiple lenders through a single application. So for the MSMEs who are looking to access capital without pledging assets, I think this is your chance. So yeah, thank you so much everybody for joining us today, and we look forward to supporting your growth journey. Thank you, Abhishek.
Thank you. All the best to everybody. Bye.
Bye. Thank you.